Well, good morning, everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach and senior manager with Schwab, and delighted that you are all joining me to take advantage of this fresh new week in the markets. I have Kevin Horner riding shotgun in the chat. He's a friend and fellow coach, knows a ton about all the strategies we're going to talk about today. So, please show Kevin some love in the chat. I thank him for being here and having my back and getting to questions that maybe I can't get to. Yes, I was gone on Friday. So today is going to be brought to you by the numbers 2, 3, and 4, because we have 4 trades that hit either targets or exits. And so we're going to have a quick look at those. We have 2 trades that need a little bit of management. And then we're going to look at 3 additional stocks. And with the wind at our back, we'll place 3 or 4 new trades today, and then look at several other potential things setting up. So we have a lot to cram into our 45 minutes together. If you are not following us on X, you are missing out, my friends. I posted a video on Friday morning on Rigetti Computing, RGTI, and we're going to do a trade on that today. So and it was just looking at trade patterns. So if you missed it, you may want to go back and have a peek at that. But we're posting lots of great content. So at Barb Armstrong CS and at Kevin Horner CS, find us, be there, be square. We're also now on LinkedIn. So come over and find us there as well. So before we get into the thick of things, know that options carry a high level of risk. We do a lot of both stock and option trades in this class. And that options aren't suitable for all investors. We use the paper money software application on the thinkorswim desktop platform, and that is a brilliant place to be able to hone your trading skills, make sure that you understand your trading plan and how to execute it on this platform before you consider trading in your live account. There are some nuances and differences, and the biggest one for us in this class is that short options will never be assigned early in a paper money account. That can happen in a live account. So, and I want to thank each and every one of you that, the diehards, I like to call you the usual suspects, as you know, that show up to this class each and every time we have it. It's Mondays and Fridays at noon Eastern. So, to Frank and Sharon and JV Texan and Will and Jack and Tom and Rocky and Chris and the rest of the gang, thank you all for being here. Yeah. So let's get right down to it. This class, we usually do a super brief market overview because Kevin does a fantastic market overview at the market open 4 days a week. So we're going to have a super quick look at what's going on in the markets. And this is a very active trading class. So this is kind of an intermediate level class where we place lots of trades. We follow up on lots of trades. We do a lot of kind of, I like to call it stream of consciousness by Barb, going through like how a trader might think about a stock when they're looking at it and why they might choose to place one type of trade over another. Of course, placing a trade is only half the battle, so to speak. The other part is how to manage it once you're in it. And so that's just as important. We started this year actually with 25,000, not 20,000. Our max position size is 5 grand. And I know some of you might look at that and think like, okay, that's a little rich, don't you think? And I hear where you're coming from on that because, this is at 5,000. Oh, let me make this visible. This is 20%. It doesn't want to switch. There we go. 20% of our account size. Now, if you had $1 million account, and this is 25,000 we started with, if you had $1 million account, you might say, yeah, no, I'm going to make my max position size 5% or, some other number. And we are willing to risk 500 to 550, which is about 2% of our account value. And, Kevin Hinks, who I just spent the weekend with, one of his famous expressions is, we're in the moving business, not the storage business. And by that, he means, his focus is on short to intermediate term timeframes, or shorter term timeframes, as opposed to buy and hold. And I'm not saying that buy and hold doesn't have value. It does. It's just this class, we're focused on growth and income and on shorter term time frames. Right now, we're doing a lot more bullish trades because the market's bullish and we're going with the flow of the market. But there was a year where most of what we did was bearish, and actually, that was our second most successful year. Was the year the S&P was down 18 and the Nasdaq was down closer to 30. Yeah, so. And if you have a small account, like somebody said, I don't, my account is under $1,000. That's okay. Doesn't mean you can't learn and be ready for when your account is a little more robust. And what I'd encourage you to do if you're in that spot, go out to YouTube and type in Barbara Armstrong and then Power of Compounding. And actually, I can show you if you stick around. I'll show you a playlist where there's a 10-minute video on the power of compounding. Like $5 a day over time can grow into like an almost unbelievable number, if you're disciplined about your approach to it. So, yeah, we all start somewhere, right? Okay, so let's have a quick look at the S&P. So S&P, hit a new all-time high on Friday, is flirting with it today. So it's hard to look at that as anything other than bullish, right? Right. Okay, how about the NASDAQ? Hitting a new all-time high today. So that makes it pretty easy. We're going to call that bullish. Okay. Hitting a new intraday high today on the Dow 30. And how about our small caps? This is 2,000 of the biggest of the smallest of the small caps. How's that? And where are we here? We're within a stone's throw. Thursday, this index hit a new all-time high. So, not too shabby. And where is our volatility index? Down at 16. So, at the lower end of the range that we have seen this year. Okay. Yeah. And then if we look at our sectors, if I change this and just come down to a public watch list, sector indices. So we've got, and I've customized this. And if you're new to this class, feel free to type a greeting in so that we can welcome you, because we link arms here every Monday and Friday. But, I have customized this, and we have a 3-month and a 1-month. And of course, technology, hitting a new all-time high today. So communications clearly in the lead, technology clearly in the lead, followed by communications, and then consumer discretionary, which is pulling back today. And, it's interesting to see how things rotate over time, but, technology continuing to lead the pack in both the 1-month and the 3-month timeframes. Okay, so if you're just starting out, you may say, well, which part of the current do I want to be in? Well, technology seems to be really, a significant driver. And if we look at the Market Watch tab and we come to visualize and we see, like, here's the NASDAQ. Like, and this is the tech sector. It's half of the NASDAQ 100. So, as goes the tech sector, it has a very heavy influence. And when we look at the S&P 500, tech also has, a huge, it's about 30% of the S&P 500. So it's a heavy hitter. So, and somebody's asking where I got those custom columns. So those are scripts. And if you come, if you haven't subscribed to the Trader Talks from Schwab Coaching, you're going to want to do that. And there's a playlist that I have called the Trade Management Mini Sessions. And I'm going to ask the powers that be to kind of reorganize this, because I'm a big fan of having a plan and then following a plan. And so today we're going to do a long call trade, example trade with a 1 ATR target. And so here's an example trading plan for that. We're going to do a long call vertical, and we've got an example trading plan for that. I'm not sure if we're going to do a short put vertical. That one they just took down, and so I'm going to re-record that probably this afternoon, and you'll see it up later this week. And based on a conversation I had with a lovely young man I'm going to create some additional trading plans that will serve the advanced option workshop, the next one of which will be in August. So you're going to start seeing iron condors and other trading plans in here. It's just yeah, it's just finding the time to do that. And for those that ask, like, how do you do these, custom scripts? I re-recorded just recently one on scripts, adding think scripts to charts and watch lists. And the ones I used are the ones that are on my charts. And then how to customize your monitor tab, how to customize a chart, just basic thinkorswim things. Okay. And then there's a whole pile of very short videos because I teach getting started with technical analysis on different candlestick patterns. And we're going to talk about some of those today. So if you're new to charting and you're going like, what is this hammer of which she speaks? You can come and here's a 5-minute video. And yeah, so there you go. So that answered about 3 questions there. Okay. So that's where, we get those custom columns. They're also, if you're already knowledgeable about adding scripts to watch lists and charts, they're in the post pinned to the top of my X feed. Yeah. And for those that were in Santa Clara that are here today, I'm so glad you're here. I'm so glad that we got the chance to meet. If you're coming to San Diego, both Kevin and I will be there this coming weekend. So looking forward to getting to meet a bunch of you. Okay, so we have 2 trades to manage. Let's get down to it. So the first one, did that get over there? Just one sec. Okay. So here's the first one is Nokia. So on Nokia, we did a buy right covered call, and we are up $325 on that. And, the idea of a buy right covered call, the way we are trading it is we bought 100 shares of the stock on this day. And we said, hey, if it goes up to $15, we'd be happy to sell it. We'd be happy to sell it. And the intention was, because this thing has just gone up exponentially. It's up 129% year to date. And today it's just underneath. But when I looked at this earlier this morning, and I had a conversation with myself, like, would I place that trade today? It was actually up a little bit on the day. So I would have considered placing a new trade today. And so here's my question to you. This expires Friday. It's currently trading at $14.90. We were paid 73 cents for this call. If we get called out, our max gain is $15. We're at $14.27. We were at like $14.76, I think, first thing this morning. So we're getting close. So do we ring the bell and take the profit, or do we roll it? Okay. And so roll it. What could we get if we rolled it? So I'm going to come down here to create a rolling order. It's waiting for data. Well, that's new. Okay. So the net of it was when I went to roll this order, we would get a 2-cent credit to go out to June. And and roll it up to the $16 strike. So we have 3 contracts. So that could, double our profit. Okay, so I'm going to just put a poll in here and then we'll come back and see. Thinkorswim has somehow been a little quirky today. So, and the question is, because it has to be a binary question, Nokia, take the money and run. Cue Steve Miller. So take our $300, which for us, like this is over 1% of our current account value. So not too shabby. And our goal in this class was originally to make $100 a week. And we did that by kind of the end of February. We were up over $5,200. So we said, okay, our new goal is to make 200 a week over the course of the year. And we're on our way. When we get to 35,400, we'll have achieved that, and then we'll set a new goal. And the reason I set that goal was because somebody had typed into the chat and said, there's no way you could make $100 a week on average in an account this size. And keep in mind, this is paper money, so these are example trades. We don't tend to get stuck in our emotions. But we could end up being called out. We said to ourselves that we would be totally cool with that if that happened. But we could close it out now for 14.27. The most we could add $75 to our gain if we wait and we're called out. Or if it's trading under $15 by Friday, we'd get to keep that $73 and keep the stock, and then we could add a new trade next Monday. Okay, so there we go. May 29th. Oh, my chart is not showing today's action. That is interesting. You know what? I'm going to log out of thinkorswim and log back in to just see if it'll reset. Thank you, Craig, for pointing that out. Okay, so maybe that's why all of a sudden that's okay. So let's come to my chart again. Nokia. There we go. So now it is showing today's action. Okay, so let's come to the trade tab, our monitor tab, and look at Nokia. And we're going to create a rolling order. And let's say we come out to June 18th, the monthlies. So we get a 48-cent credit, but what if we said, okay, we want to roll it out and up? So this is saying they wouldn't give us any additional money for that, but they would, we'll see. Oh, they're saying 2 cent. Okay, we paid 2 cents for that. And where are we? Oh, we have 66% saying take the money. Okay, so I'll give that a minute, but it's coming up. And then, even if we close this out and we take the money and run, so now on the monitor tab, where are we? We're at 14.70, so we've got 30 cents left. And since the vote is take the money and run, we're going to just close this out. So we're going to create a closing order to sell the stock and buy back that call. Okay, so we're out of that one. Now we have one other one to look at, and that's Visa. And so Visa's like really on the struggle bus today. And we had done a long call vertical on it on this day. And our rule with long call verticals, if you look at our example trading plan, is we want to get out when we're up 50% or down 50%. And we put in a target to say if it's up 50%, we're out. And then we monitor it daily. And so if we look at this one, We have two long call verticals on. We've got AMAT that's up 32%, so we can let that ride. Visa's down 50. So we're going to come to Visa, and our rule is if we're down 50%, we close it out. So here's our vertical. We are going to cancel and replace our order. Now we wanted to get out for 375, saying, we'll take the $1.10 because we have two contracts here. So we could lose another $220 on this. And so we, kind of our motto is a small loss beats the stuffing out of a large loss. Okay, so now the question that you might ask is, well, that was a losing trade. And I would say, yes, it was a trade that lost money, but it was a successful trade in that if we go back and look at when we placed the order, did that make sense? Like if we were to go back and look at it again, was that a valid entry? And it was. The second question is this, did we get out when we say we were going to get out? Did we follow our plan? And we did. So it looks like there was a reset here. So I'm going to come up to application settings, display, look and feel, font size is now small. I usually have it large just so you guys can see it easier. So Charles, thanks for pointing that out. Okay. So hopefully you can see everything a little bit easier now. Okay, so that's our two trades that we needed to manage. One, we rang the bell and took a profit. One, we followed our rules and we closed it out for a loss. Okay. So now let's come and look at a couple of new trades and then we'll do a little bit of trade management. So I know this stock gets a lot of press, but there's a reason for it. We were doing iron condors for a few months here on NVIDIA when it was busy going a whole lot of nowhere. And then it broke out, came back to retest. And, one might argue that this looks a bit like a bull flag. And we have today the coveted, it's trading above the high of the low day. So one of the things we look for, on an entry, and this is going to come up again later, is a close or a trade above the high of the low day. Some will call that a hold. So we're just looking for confirmation that this pullback may be complete. And so, we have a couple of things we could do here. We could buy shares of stock. It's a pretty expensive stock for our snack bracket, given we only have, 33.6 in the account. So we certainly couldn't buy 100 shares, but we could buy $5,000 worth, right? And we could do a swing trade. Remember, we're in the moving business, not the storage business. Or we could do a long call vertical on this. Or we could do a long call with a 1 ATR target. So we've got lots of choices. So if we said, okay, if we do a long call vertical on this, and it's sitting now at 221. So when I first looked at it, it was just flirting with 220. So it's gone up a bit, but could we do one where it's already through both strikes? Say the 215 and the 220. And one of our rules is, does it trade more than a million shares a day? Check. Does it have lots of volume on the options? Like 86,000, I think we're good because we're going to do how many of these? Probably one or two. Is the bid-ask spread tight? And we define tight as less than 10%. So yes, it's 20 cents on a $16 option. So if we came out and said, okay, we want to buy a vertical, this would cost us $2.63, and it's already through both strikes. So it just has to stay where it is, and we'll ultimately have a successful trade. Now, what would it cost us to do the 220, 225? That would cost us 225. So for about 50 cents more, not even, then it did, like, and this would have to move up $4. We could do a trade and this is personal preference, but like the probability is 50% that come July 17th, we've got a 50% probability that this will be in the money. We've got a 97, well, it should be 100 because it's already in the money. It's in the money now. So if we said, okay, we're going to buy a vertical at 258, 260, we're live in the market. So this is going to flip all around. And our goal is a 50% gain. So if I take 265 times 1.5, I'm going to put my target at 397. So I'm going to change my advanced order to first trigger sequence, right click, create an opposite order. I'm going to make this, I'm going to call it $4 because the numbers keep flipping around. And we're going to do 2 contracts. Oops. Make that good till canceled. Confirm and send. Oh, it's not letting me. I'll put this in our long call vertical bucket. And we're going to compare this to a 1 ATR trade with a long call. Okay. So fire in the hole. There we go. Okay. So now if we said, okay, if we came out to the same date, now can we afford to spend $1,400, $1,100 on a long call? No. Because what's our rule? We don't want to risk more than 500 to maybe 550. So we could do maybe this 560, like that's risking $560. That's the most we would want to risk, right? Now we could do this as a swing trade. So if we did this as a swing trade, we'd say, hey, when this gets back up around 235, 236, we want to cash in our chips. We want to, so we did the 215, 220 CB. Yeah. So we could do it as a swing trade. Now, if we did it as a 1 ATR, and I brought this up on my chart, if you don't have it, you can just come to edit studies and type in ATR, right? And then bring this up. And if you want a more complex definition, just hit the little question mark and it'll bring it up. I've already got this on my chart, so you would just add selected. I don't need to, so I'm going to take it off. You'd hit apply and okay. But what this tells us is over the last 14 days, on average, the range on NVIDIA has been $7.41. So we're going to look at this and say, okay, we're at the high of the day at 222.17, or we're pretty close to it, 221.89 now. We're going to add 741 to that. So 221, sorry, so the high for today, 222.17. So we're going to take that 222.17, we're going to add 741 to it. Okay, so I'm going to switch this to a scratch pad. This is our 1 ATR example on NVIDIA, where the 1 ATR is 741. And our target is going to be today's high, 222.17 plus 741. And feel free to double check my math. We all know that my math skills are not perfect. And our exit would be 215.70 minus 741. So 208.29. Okay, so how do we put that in? We're going to come to our trade tab. I'm going to make this 11. And some would say, well, when you go that far out of the money, honey, okay, 12, make this 15. When we go out of the money, like, aren't we going to make less? Because the delta, what delta tells us is the amount of increase that the value of this option will experience if the stock goes up by $1. And today it's gone up by 10 bucks. So, this 20, it's 26 cents. If we could buy the at the money strike, it would be 50 cents. But as a percentage, this is an actual number. So if this goes up by 25 cents on 480, 25 divided by 480, that's a 5.2% increase. If this goes up by 51 cents on 1225, 51 divided by 1225, that's a 4.1% increase. So our increase is actually higher here. And again, this is expected to be a very short-term trade. We're looking at something that we are that has momentum. It's up 19% year to date. And the earnings report, I mean, when you're NVIDIA, it's pretty tough to beat expectations. But we're looking for something in momentum, and we just want to ride it for a short time and make a little bit. We're looking for a base hit. And so we are going to go ahead to the trade tab, and we are going to do this 485 to 490. So that has our risk because we could lose all of it. Are we intending to lose all of it? No, we're intending to make money. But we know that, we are not infallible, that some trades do not work out. And so we're position sizing with the recognition of that. And so we're going to create an opposite order. We're going to make it okay. I've got issues, sadly, with this. So what you want to do here is it's not letting me change it to a market order. And so I'll fix this after the class, but we're going to put in our target and say, if this goes above 229, then 229.58, we want to exit this position. And if it goes below 208.29, we want to exit this position. So it has to meet one of these conditions, 208.29. Okay, so we're going to hit save. And what we want to do with this is make this a market order. Okay, so if I put this in at 485, like I'm going to put this in at $1. And really, this should be a market order. So don't think that this dollar is the way we should put it in. But the expectation is that if we get stopped out on this tomorrow, that this would likely still be worth $1. But when we look at this, we're saying, we only want to get out if NVIDIA goes above 229.58 or below 208.29, and we want to get at least $1 for it. And this limit says, like, don't sell it unless we get at least $1, but it also has to meet one of these order conditions. So I think we'll be okay. But what this really should be saying is that sell it at the market price when it either goes above 229 or below 208. Okay, I just want to be clear. So the usual suspects, we'll get that. And then I'll put that in our long call. And this is a 1 ATR target and exit. And we're going to compare it to the long call vertical. Now, my expectation, and it just depends, like if NVIDIA really goes up dramatically, we could end up out on both relatively quickly. But the expectation is that this one will be a trade that comes to completion sooner. And this is one we have to manage daily, because if this doesn't go up and hit our target of 229.58 tomorrow, we're going to snug the stop up to $1 below the low of tomorrow's candle. And so if you have not looked at the example trading plan, and it's just an example from which you can create your own trading plan. Okay, you may want to go to the trade management mini sessions, which is a playlist in the Trader Talks from Schwab coaching on YouTube. So you'll want to make sure you subscribe to that. Okay, so we've sent NVIDIA in. I'll make sure that one fills. We've placed 2 trades on that. Now, I don't think we've done Rigetti. So let's do one more. So we got that one. Let's do one more new trade. So Rigetti's been kind of on the struggle bus, right? Like it's, it was rolling down the hill with Humpty Dumpty. It went from 58 to 12. Like, holy smokes, Batman, that is that's a rolling the whole way down like a hill out here. I live in Utah and my kids keep correcting me. These are not hills, Mom, these are mountains, and they're right. But, if we look at this, and this one I did a short video on that I posted on X on Friday morning, where we had this kind of cup and handle. And when you have a cup and handle pattern, the way that some technicians will measure it is they'll say, well, this pattern, which, started in January and it broke out kind of close to the second half of May, this is about a $9 wide pattern. And so if you wanted, one of the ways you can establish a target is to say, well, I'm going to take this 2157, I'm going to add $9 to it. And that gets us to about 30.50. I can write today. So 30.50. And so where are we now? We're at 25.23. So that could be, if we bought the stock, a $5 gain. And you're saying, well, that's not having me drink something out of a coconut in Tahiti, but and maybe not, but $500 is 2% of our starting account value in this class. It's not nothing. Like remember, our weekly goal is to average over time $200 a week. That's 2.5 weeks worth. Yeah. So, it's, and the other thing, and Kevin Hinks pointed this out, I got to sit in the back of the room and hear a few things. But if you come to the trade tab and we look at the options statistics, we can see, 87,000 calls, 19,000 puts traded, like that's huge, hugely bullish. The skew is quite bullish. Yeah. Yeah. So could we buy shares? And what's the advantage of buying shares is that if it lollygags about a bit, and some might describe this breakout as a bit of a bull flag and a stiff breeze, because it's kind of gone consolidated. If it takes a hot minute to get up to that 30, and if we're buying in at 25.09, why don't we just make it 30.09? Like if it goes up $5, that's a 20% return on our investment, like not too shabby. So, how many shares could we buy? Well, we could buy $5,000 worth. We have almost $27,000 sitting there doing ding qua qua, right? Doing nothing. So let's come and buy. We're going to buy custom with an OCO bracket, because if we don't put in a stop, how much are we risking? $5,000. So we're going to say, okay, if we see this 2157-ish level, well, what was the high that day? 2210. So we're going to say if it goes 3% below that 2210, so 2143 is going to be our stop. Okay, so 2143 is going to be our stop, and our target is going to be 30. Let's just make it 30. Let's not be greedy. And 2143. Make these good till canceled. We're going to do 200 shares. And then if I click this firecracker and turn it into a paper clip, then it corrects and makes all of these match. So it's a $5,000 investment. Does that meet our rules? Yep. If it goes up 477, we want out. And for us, like I use baseball analogies, like if we made $4.77 times 200, like that's the better part of $1,000. Like that's a grand slam, my friends. Yeah. So, and we're going to just put here our target is based on the cup and handle pattern. And you know what, guys? Like this is just a note from you to yourself. It's not like anybody else sees this. So, sometimes it's like, well, how did I come up with that target of 30? This is how we came up with it. Yeah. Yeah. You know what? Like, I think I've had fun doing well, not everything I've ever done. I wouldn't do this if I didn't enjoy it, but it doesn't mean you have to be stodgy about it. We want to have fun, right? Right. Repeat after me. But you also want to treat this like a business. And how do you treat this like a business? You show up, you're consistent, you're disciplined, you have a plan, you trade your plan. Like there's a reason Kevin and I say this like ad nauseum, right? Right. Okay, so there's a couple of other things I'm going to look at super quick. And these are ones we decided not to trade today because I get asked all the time, like, how do you pick the ones you pick? So, we had a double bottom on Apple. It broke out. We're, in the process of potentially setting up a bull flag, but do we have an entry today? Do we have a hold? Yeah, we do not. We do not. Ah, dang it all. Okay, so you know what, guys? I'm not going to have time to review our trades. So I will do a recording and I will put it in the trade management mini sessions for you. Okay. So let's look at these GM, um, double bottom. Do you see what I see? Do you see this little double bottom? And it's breaking out, but it's coming back to retest. But do we have a bounce yet? No. So what do? Take one hand, take the other hand. We sit on them. We wait. Okay. So we're waiting. CVX. Now, this is in the oil industry. So you might just say, and sometimes, we've traded within patterns. And so might we want to trade within a pattern? We might. And we might say, this is oil. I think I'm going on a little like oil hiatus. Now, the trades that hit our targets, and I will do a little recording on that. And again, where you will find that recording, and I do this just for, the fans of this class, they will be in here. And the trades I will review in that. So look for that, tomorrow or the next day. But we had Intel. So we had done a short put vertical and a long call vertical. The long call vertical hit very quickly. And the short put vertical we were out of last week. So both of those were profitable trades. Both of them had returns in that 50% plus range because when we placed the trade, volatility was high. And so we got a really juicy premium on the short put vertical. Our MBS was another one where on this day we did a long call vertical and we got out for more than we were expecting. And I thought, ooh, it must have gapped up. And in fact, it did gap up. And so we ended up with a 69% return on that long call vertical. So it got out for we got out for better than what we were planning on that because it gapped up. 3M, we did a long call, and this is one where we traded within a pattern. So sometimes you don't always have to break out, but we had this double bottom setting up, and we said, wow, this is really moving. How about we do a swing trade? And that's what we did. We bought a call, and we exited when it got to our target. We were up about 50% on that one also. And then is everything sunshine and roses? Sadly, no. We did a trade on Devon, and I think we did one in my larger account that worked out because we saw that it was close. We had a target of 50, and I think it got up. It got up to 50, so we bought shares and put in a swing target at 50, and it hit 50, and we made some money. Then in this class, we did a buy right covered call, and it came down and stopped us out. And so we lost a little bit on that. We were down about 5%, $231. But I would consider this to be, again, because we followed our rules, a successful trade. It's just one that didn't make money. Yeah. Oh, the video about compounding. Yeah. So that one is in here too. Oops. Let me just bring it back over. Okay, yeah, and as I'm bringing it up, there is a survey in the chat, guys. So here's the deal with the survey. 2 questions. One, I hated it. 10, I loved it, and everything in between. And then the other thing is that you can put comments in. And so let me know, was the pace okay? Would you like me to do more new trades, review more trades? Are there topics I haven't covered lately that you'd like to see? I promise if you fill it out, I'll read each and every comment. So this is in the trade management mini sessions, and they're pink. The two on, the power of paying yourself first. So share these with your friends, your family, your kids, your grandkids. This blew my hair back the first time I saw it. So, guys, that's a wrap for today. Thank you to Kevin Horner for being with me in the chat. Thank you in advance for filling out the survey. Hit the like button. It helps move things up in the algorithm so more people can find this content. You could be doing a favor for a random stranger whom you may never meet just by hitting that like button. Yeah, and subscribe to the channel. So that's a wrap. Up next, someone is filling in for James Boyd. One of his children is getting married, so he's in a Hawaii doing like the wedding bell. I'm not going to say wedding bell blues, the wedding bell celebrations this week, but he's up next. Yeah, so stay tuned. Lots of great content still to come. Take care, everyone. Have a great day, and I'll see you tomorrow for getting started with technical analysis. Bye for now.